Greetings, pretend learners. My name is Mr. Simbi, and welcome to today's accounting class. In today's class, I'm going to be focusing on debtors' allowances. Did you know that if a supplier misinforms you of a product's abilities, the Consumer Protection Act of South Africa gives you the right to return the goods and be refunded in full? Today's objectives are as follows. Number one, we will identify transactions that involve debtors' allowances. Number two, we will prepare the debtors' allowances journal. Thirdly, we will post from the debtors' allowances journal to the general ledger, and we will also post to the debtors' ledger. We will prepare a trial balance, and lastly, we will do the accounting equation on transactions that affect the debtors' allowances journal. Now, we will now move to your pre-knowledge. In the previous lesson, we were able to prepare the debtors' journal, and we were also able to post from the debtors' journal to the debtors' ledger. We were able to create what is known as the debtors' list. We also prepared, or we also did, what is known as the accounting equation. Now, here are the new words and language that you're going to learn from today's class. Consumer Protection Act. What is the Consumer Protection Act? When you hear Consumer Protection Act, what is it all about? Now, this is a law that allows customers to return goods within 6 months if they are defective. Defective simply means maybe they are broken, maybe they are damaged. All right? So it allows consumers to return goods within 6 months if they are defective or do not meet the required standard. We will now move on to our definition. The Debtors' Allowances Journal is a journal that records returns or allowances of debtors. Remember, debtors, these are people that buy goods from us or businesses that buy goods from us on credit. Now, when they are not satisfied with the quality of goods that would have given them, or that the goods are defective, then we will record them in what we call the Debtors' Allowances Journal. We are going to quickly look at some of the reasons why a debtor may return goods. And here are some of the reasons. If the goods are damaged, if it is incorrect quality that was given to the debtor, or if the debtor received goods that are wrong, in other words, it is not what the debtor had ordered. If the goods are faulty, this is mostly in electrical goods. When goods are damaged or pegged incorrectly. Now, there is other reasons why we can also have debtors' allowances. Debtors' allowances will be considered when a debtor has been overcharged. So we were supposed to charge a debtor 700, but we ended up charging the debtor maybe 770. So we overcharged the debtor on this 70. This will result in us having debtors' allowances as well. In this case, the debtor will ask the seller to reduce the amount that appears on the invoice. In this instance, the goods will not be physically returned. Remember, in the first instance, if the goods are wrong quality, the goods will be returned back to the business. But in the event of an overcharge, we will simply allow an allowance, but the goods will not be returned back to the business. We are going to quickly go for a short ad break, and then I'll see you after the ad break.